Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It's going great. How's everyone else doing? I hope you guys are doing well. Listen to our podcast. We really appreciate it. It's going well for us, especially me. I'm very busy. 2022 has been wonderful, and it continuously looks great. I know interest rates are going up, guys, so don't comment too hard on that. But for us, or for me, I can only speak for myself. It's doing well. People are still investing, still doing things, and construction is still going on. Commercial construction, especially. So, what about you, Raphael? How's it going over there?
Great. Yeah, you mentioned interest rates ticking up. So I know I deal a lot in the investment space, and there's people been speculating about what that looks like over the next 12 months. And so I know there's some people that are hesitant about making decisions, but it hasn't really affected my business too much. I mean, I've done several investment deals recently, and so it's still very active, but it's definitely going to be interesting to see how it plays out over the next 12 months. And interestingly enough, we actually had a phenomenal guest today, Don Spafford, who's with Happy Camper Capital. And one of the property types that we talked about during this conversation is camping grounds. And this is a relatively recession resistant investment opportunity. And that's one of the reasons why he ultimately decided to go into pursue this as an opportunity. And so what we talked about primarily throughout the podcast was, number one, what got him started in the commercial real estate business. He started off on the single family home side, and started scaling his way up to fourplexes, had a few fourplexes, and then decided that he just wasn't reaching the goals that he wanted to achieve as quickly just by individually buying up these fourplexes. So he started the multifamily side and then ultimately ended up in the camper side as far as the property types are concerned. And so we talked a little bit about what that looks like, the transition from single family to multifamily, and then multifamily to, the campers, campgrounds, I should say, as an investment option. We also talked a little bit about his social media presence. He even said it throughout the podcast. He said, I didn't start, advertising at all or had any type of social media presence up until 2017. And he showcased how, important it's been in his business as far as building his brand. And now as he's starting to operate on the general part, the GP side, with a lot of these deals, helping raise capital for some of these types of opportunities has been helpful because now he has a presence on the social platforms and also on Bigger Pockets, where he generates a lot of business through for property management and other facets of business that he operates within. So, I found the conversation extremely interesting. We haven't had anyone really on the podcast that talked about, campgrounds or any types of that type of property type. So it was definitely an enlightening discussion. So Jeff, do you have anything you'd like to add?
No, Don's a great guy. He I think he's like a serial entrepreneur is what I would like to call him. He's got his hands in all these different pockets, and I can't wait for you guys to listen about it. And he also has 2 gold nuggets of books at the end of this podcast. So I definitely listen to the podcast. Don't be that guy who fast forwards to get the gold nuggets at the end. Don't do that. But the 2 great books that he recommends. I know Raphael highly recommends one, but yeah, they're great books. So can't wait for you guys to hear it and listen to this podcast. Thanks again. We really appreciate everyone giving us reviews. If you are listening to this, please take the moment. If you're listening to the car, obviously wait until you stop. That's a big thing. And give us a review, 5-star review. That would be wonderful. It's definitely helped us grow this podcast and get it out to more people. So we really appreciate it.
I echo that sentiment as well. And I know we always say it at the beginning of the podcast episodes, but we really do truly appreciate it. And the fact that you guys are willing to leave 5-star reviews has been super helpful for the podcast. So if you haven't already, go to Apple Podcasts and leave us a 5-star review. So again, thank you all so much. So without further ado, let's go ahead and dive right into this podcast. Well, hey, Don, great to see you this fine afternoon.
Hey, thanks. Glad to be here.
Yeah, thanks for coming on. We appreciate it.
Definitely.
my pleasure.
Yeah. Where are you tuning in from?
I am in Idaho Falls, Idaho.
Nice.
A place probably most people have not heard of. It's not Boise. We're on the other side of the state, eastern Idaho.
Yeah.
That's awesome. Yeah, no, I hear
a little closer to us.
Yeah, a little closer to us than probably
on the east
Boise
side,
is. Yeah.
Yeah.
But that's great. No, and I've heard great things about Idaho, obviously Boise as well, but I've also heard things about Idaho Falls and, just the, that part of the country. And so we're obviously honored to have you on the podcast. We've interacted in some capacity via LinkedIn, and I've seen your posts, and you always add a lot of value to the audience as well. So I'm pretty confident that you'll do the same today. So we're honored to have you, man. Really. And one thing I wanted to ask you, and this is typically what we ask when we first get started and talking to someone, is tell us a little bit about yourself. What is your background? What got you, in the business?
Yeah, thanks. My background, I guess, if you want to just based off of, we'll say, go back to my youth, I guess, even, I've always had an interest in money and how money works, finance, things like that. Even at a very young age, playing Monopoly with my family, I liked to, get the hotels and things and be the one to win the game. I most of the time did. So, and then growing upon that, I think as I got older into my early teens, I started paying attention to like the stock markets and of course this is pre-internet days, early 90s. I would look at the newspapers for the stock changes on certain things and kind of followed that a lot. I got a job early at 14 years old. I started working and wanting to invest, but still not having enough to really invest. There weren't platforms at that time like there are today to invest with a little bit of money. And so that was kind of my starting point, I guess. And I more or less befriended some stockbrokers, even in my teenage years. That's just to kind of want to learn from them and see how they did it. And, they were actually ones kind of steering me away from it, saying that's not how it's have to be. But so continue from that. At some point I got into I started going to college. 95, fall of 95. At that point, again, internet and computer stuff was all kind of just coming on scene. So I was like, that sounds cool. So I pursued a path in computer science at the time. It was very complicated and not very fun. Again, at that point in time, today is very different. But I did not enjoy it. So I kind of backed off of that and kind of just went after general business degrees. End up, taking some time off and come back and finally finish my degrees in finance, investment science, portfolio management. So still things dealing with investing. And that was my career path. I thought I wanted to follow to become a financial advisor, a portfolio manager of a fund or whatever it may be. And that was my goal. By the time I finished school, because I had to go part-time for a while and took some time off, just family things kind of came first. And then, I landed a job that would pay my tuition. So I was able to go, but I still did just part-time. So by the time I finally finished all that, was actually in 2008, spring of 2008. So I was like, yeah, great. Let's go and get things done. And of course, just have it right at that same time is when the markets began to fall and all these big companies that would have been great employers for that degree are all now going out of business and laying people off. So I was kind of left like, well, now what, so, that kind of gave me a different perspective. I had planned to go on and get a master's degree in finance at that point, but I was like, well, what's the point now? It would serve me nothing. So what I actually did instead, as I was looking for jobs that were available, anything related to finance was all in accounting. So I was like, well, maybe I should go that route. So I actually went back and added on an accounting degree to everything else and planned to study for the CPA. And so I did that. I got the degree and I started studying for the CPA exam, but I had the same issue that I had before when I tried to study for the CFA exam as an analyst for finance, is that, with a young family home, I found it very difficult to create time to actually study to the level I needed to actually, be able to pass the tests and things. And so I kind of got to a point where I more or less just gave up on that. I was like, this just, it's not going to happen. I'm not willing to sacrifice my family just to get this title, or whatever, maybe, even though it meant more income, but the more income was less important to me than my family. So, lo and behold, around this time in, say around 2010, my wife, she'd always been a stay-at-home mom, and we got to the point where our youngest daughter at the time was starting school, and she wanted to start having a job, but we wanted to be something that she could be flexible to be available when there's no school or the kids are sick or whatever. and somehow real estate came up in that. So she decided she liked that idea. She became a realtor, got her license, and started working as a realtor. This time we lived in Omaha, Nebraska, and some of her very first clients were investors, and that's kind of really what from there got me intrigued to want to learn more about how do you invest in real estate. Something I never considered before. I'd always, from what you see on TV and whatnot, it's always like, this is for the rich and wealthy. It's not a thing average people do. And so anyway, so from there, that was my kind of starting point. I was like, I got to figure this out. So I started reading books and learning. And it wasn't until later, a few years later, when we moved from Omaha to Idaho Falls, that I really got more into it and started going to different like real estate events that come through town, and then discovered bigger pockets and got on there and started learning and growing and making connections, and took the challenge against myself to find a way to make it happen, and bought our first property in 2017.
That's awesome.
Nice,
Yeah. And you alluded to the resources out there and how they weren't really readily available up until recently. Like you mentioned bigger pockets. I mean, I think bigger pockets started, within the last 10 years, if I'm not mistaken. And obviously that's an inspiration for a lot of people to get into investing, and that, they make it very accessible to the average person to be able to start their journey. And, they offer a variety of different, podcasts and books, and, you get to see people at different levels. They've incorporated the rookie podcast now, and, those individuals are getting started in the investing space. It's a great way to, not just look at someone who's already at, however many thousands of units or whatever, and say, okay, well, this is more manageable. This is more achievable. This person has 1 or 2 properties. This is how they've managed. They also are holding down a job, and they're able to do that while building generational wealth. And I know that, obviously that's part of the reason why you do what you do. And that's really exciting to, hear you say that.
Yeah, exactly.
Don, it sounded like a great journey, though. It kind of led you to where you are now. So, and I kind of want to dive into the adventure of your journey of getting to where you were. And we're going to kind of start at where you are now and kind of work backwards. So my question is what landed you in like the hospitality sector, and particularly like with Happy Camper Capital? So if you can explain kind of what made you take that leap and get involved in everything.
Yeah, for sure. It was not something that was planned out. I honestly would say, I didn't say, hey, I want to go invest in RV campgrounds. It was sort of a short journey, I guess, but this is about a year ago. I was really focused on getting into the commercial real estate side. I wanted to get into bigger multifamily deals. Ideally as a GP to have the management over it and help in all the process of that. But I was not finding great deals for me in a way that made sense. Going from where I started, I was always had to seek out. I wanted the best and highest return I could get for my money, because I did not have huge resources available to put in, $1 million in every single deal that came up, whatever, or even say 10,000. So I wanted to get the most return I could get for as little as money as possible to continue to progress and get to the point I was trying to get to. And so again, a year ago, so I was looking into apartment buildings, trying to get in as a GP on some syndications, or at a minimum find some smaller deals I could do a JV with somebody else. And again, I wasn't finding anything that I felt comfortable with that made enough sense to me for the returns that I would feel comfortable to ask somebody else to put money into. And then so I started looking, well, maybe I could just go in and invest as an LP in somebody else's deal. So I was, I'd associated with lots of different people that are sponsors of syndications, and so I was receiving dozens of deals come across, all the time. And I looked through all these, and I'm just like, they're good, but just not great. Nothing that really makes me like get excited. So, I want to invest in this, And so interested in doing that, I kept searching and kept, going back to Bigger Pockets. I continued to listen to the Bigger Pockets podcast as part of my, normal weekly routine to listen to each of those podcasts the day they come out. And somewhere in there, on one of those podcasts, somebody talked about campgrounds, and it was something I'd never even considered before. But kind of like a sort of a light bulb went off. I was like, hey, this is for where I'm at in Eastern Idaho. We're like an hour and a half from Yellowstone Park, and there's everybody here has campers and goes camping and all that stuff. So it's a whole lifestyle thing here. And so I was like, there could be an opportunity there. So I started looking more into it. I went to some webinars and meetup events that are specifically about campgrounds, and just to learn more and network. And I started to try to get myself into a deal in a way. I was like, hey, maybe I could still get a small piece of the GP on the campground or JV or whatever. So I started going to these meetups and saying, I'd be happy to be boots on the ground if someone wants to buy here in this area. I can go check it out for you. Get my wife's a realtor, so we can help with the purchase and negotiation and all that stuff. And just in making those types of connections, I came across a man named Adam Lindy, who's one of the partners at Happy Camper Capital. He and I got on a call and started just to discuss, what it is that they were doing, what the goals that I have, what I'm looking to do, the kind of returns I'm looking for, my future plans, where I want to be in the next 5 years, all that stuff. And just having that type of discussion. And they were still a fairly new company that were just starting to grow, expand, and add on team members. And they felt that everything about us aligned, and they actually then invited me to become part of their team. And so I was like, hey, that sounds interesting, but I wasn't sure I wanted to do that just yet, because I wasn't really necessarily looking to take that big of a step just yet. I was more focused on multifamily, and I just joined a couple of masterminds that are all around multifamily. And so I was like, this might make me look, bad. I don't have this like the people that say you don't have the shiny object syndrome or flip flopping or whatever. If I'm talking about multifamily and so often, but now I'm not doing multifamily. So I took a few, probably a week or two to think about it, and in so doing, I went to, I was going to these meetups. So I just asked people like, hey, what do you guys think about RV campgrounds? Is that something you invest in? Have you ever used one? And everybody I talked to said, yeah, they've ones that have, especially ones that have been there. Like someone said they just last summer they rented an RV and went to some of these places. And they loved it, had a great time. They saw there's huge opportunity there, and it's like, okay, that sounds good. And then I talked to my neighbors. So many of my neighbors around me are generally, I'd say, high income earners. But none of them are real estate investors. I'd asked them in the past about investing in some multifamily deals, and it's something that they don't understand. So they're scared of it and are not willing to invest in real estate. So I asked them of like, hey, would you invest in the campground? And so therefore it's totally different conversation now. They're like, yeah, that would sound awesome. That it's something they understand, they're already using, so I enlighten that a lot to say, people that love, say, iPhones. It's like, why not just buy some Apple stock, and then you're, invested in what you like, and so that's kind of where it kind of just came from. And so I joined up with them just last November, and it just kind of exploded since then. I jumped into it, all in, and the more I learned about it myself, the more I loved it, and see this is an amazing model for people like myself that are looking for higher returns. And on top of that, it's something you can actually go to and have fun with and enjoy it.
Nice. Absolutely. No, and go ahead, Jeff. I didn't mean to interrupt.
No, I was just I had it spinning off. I didn't know which, Don, what particular, like your deal that you actually worked on, like the very first one, was that the one that you were asking your neighbors, or was there a particular one that actually went through? Or
so I wasn't just asking about specific deals. I was just asking in general, just, what do you think about it?
Yeah, you're putting out feelers, really. It's just trying to get
exactly.
For
what's my due diligence to see if this is what I wanted to actually go into.
Oh, absolutely. Yeah. And you mentioned the campground piece. I mean, I personally have never been to campgrounds myself, but I know it's a very popular thing, especially in the middle of the country. And, a lot of people, even on the coast, love to be able to go to some of these national parks, and, being so close to Yellowstone, it makes sense. I mean, and that's one of the cool things about, commercial real estate in general. And just to give you some context of our listeners, we have people from a variety of different facets of the commercial real estate industry: brokers, investors, bankers, et cetera. And, they work on a variety of different property types. And it just so happens that this particular property type is one that I know a lot of people have interest in because of the fact that it is, just a different type of, residential, and also incorporates hospitality in there. And, as we'll get into, I'm sure it can be recession resistant in a variety of different ways. And, we're excited to kind of explore that a little bit more with you. So one of the things that I was kind of curious about, and given the fact that we are Commercial Real Estate Academy, the Commercial Real Estate Academy podcast, and we focus on commercial real estate topics, like why the commercial real estate sector? Why not? Because Bigger Pockets obviously started as a residential focused podcast, and a lot of the discussions center on scaling a single family home portfolio. So what was your impetus for wanting to transition more on that on the commercial end?
Yeah. So me personally, I was never interested in the single family stuff. That first property I bought was a fourplex. Because I knew I wanted to go into multifamily. And so at that time, the biggest I could do was a fourplex. That's all I really could understand or had resources to do. I didn't understand yet anything about syndications or how to get into the bigger multifamily things. So my goal initially was just I wanted to continue to scale buying fourplexes. And I thought I would use that to get to my financial independence number and everything would be great. So after my third fourplex, I was like, this is still going to take a long time. It's and as time progressed, they were getting harder to get. The prices are going up. There's more competition. People were buying up fourplexes like crazy, just like they were single families. And so it became more difficult to find ones that would cash flow well. And so it just I had wanted to get into commercial again. I didn't know yet how. I didn't have those connections. I was not active on any social media at all. The only place I was active on was Bigger Pockets, and so I made a lot of contacts through Bigger Pockets, and actually talked to a few people that are doing syndications through people that were guests on the Bigger Pockets podcast. And but even in that, I was like, okay, so me even coming out as LP, it was, in most cases, I was out of my reach. I didn't have the resources to do their minimum investments on most of these, and so the how I got into commercial was kind of sort of by accident, I guess. The second and third fourplex I bought was a package deal, and I initially looked at a property in that area that was like a 26 unit that had been sent to me by a wholesaler. So I was trying to find a way to get that done. When I couldn't get that, the broker had reached out into that area, mentioned to me that she had these fourplexes. So that's how I got into those. But because of that initial contact, I guess is later some other opportunities came up that she sent to me that were not necessarily commercial real estate I could think of it yet, but it was more of some opportunities to flip land that was commercial land. So we could get it essentially super cheap for the area and then flip it. So my first technically, we'll say commercial deal was commercial land as a flip deal. And then from there, another one kind of came up down the road, and we ended up getting that one as well with different partners. And we decided we're actually going to build on it. So we're going to be building a commercial, like a 5-unit strip mall on there. And so now I'm getting actually more commercial building stuff. And then it's kind of things that's kind of naturally progressed, not really intentionally, but at the same time, sort of intentionally. I was continuing to grow this network, and I became active on like LinkedIn, going to different meetups and meeting with people that are doing syndication deals and other investors, learning from them and getting those contacts. And the next opportunity came up for me was actually I got invited to invest in a new development deal here in where I live in Idaho Falls. A team that actually contacted me a few years ago through Bigger Pockets. And at that point, I told them I wasn't interested, but they came back to me early last year with a better deal, and I was like, okay, this looks interesting. And again, going back to what I said before, I couldn't find anything that was really making sense for investment for the returns I was looking for. This one they were offering did. I was like, okay, that sounds great. And so I just casually brought up in conversation with them that I'm going to these meetup events. I have a lot of connections with people that look to invest in deals, and so I just asked them, like, hey, would that be a benefit to you if you let me join your team? I can help you guys raise capital for your deals. And so that kind of just came about, and I'd say just in the moment, and they actually agreed to that. So I joined up with this team here that does ground up development now of large multifamily. So that deal they were doing at the time, like as soon as I joined their team, like literally within a week or so, a big opportunity came up. We're building a 800 unit property here in Idaho Falls. And so I got into that. And so that was now my first entry. Well, technically I'll say as a GP on a team doing something big. And then from there, the next thing was the happy camper stuff that came up. And so it was, but for me, as I progressed and learned, even back in the days from that first fourplex and learned through Bigger Pockets, I understood that there was that economies of scale with going bigger into commercial. You're not dealing with a one-on-one tenant in one property type thing. That's why I wanted to go into fourplexes, and I wanted to then get into apartments, because then you're only dealing with one location, and granted you got more people you're dealing with, but it's all more easily managed. If you have a property manager, if I'm managing myself, I can go there to one place and take care of the problem. You got to replace a roof. It's only one roof, and all these things. So it just made more sense to me. And kind of the reason I got into the fourplex and why I wanted to go multifamily was I saw it personally as less risk. So if starting out, especially when I had that first property, it's like if I only bought a single family home, well, first of all, the income was most likely not going to be that great on it. But the biggest risk for me, I saw it was that if that property was ever vacant, then I have to cover that mortgage, right? And I didn't want to have to do that. And if I have to then also replace all the flooring or whatever happens from the previous tenant, then that entire year's worth of income is all gone, probably more. And so I saw that as way too much of risk. So I'm like, if I got a fourplex, at that point anyway, it's like it's less likely that all four are going to be vacant. Maybe two at most at a time, and the other two there should still at least cover most, not all of the mortgage. So I should still be much less risk I'm taking on for me. And that's how I viewed it at that point, and that's still how I view it today. That's why I still don't want anything to do with single family.
Yeah, no, that makes complete sense. And that's kind of the logic that I hear a lot of people, particularly those that are in the multifamily space, is the reason why they decided to transition away from what they were doing before, is for that economies of scale and spreading the risk across a vast amount of tenants versus just a single tenant as well. So it's always interesting to hear people say that, and again, I specialize primarily on the retail and industrial side of the business, just through my brokerage side of things. And I know Jeff does a lot more on those sides as well. But all the people that we've talked to in the multifamily space, I mean, it's really rearing right now. It really is. And that's why I think what you're doing with the Happy Campers is so smart, because it is to the point now where some of the deals that I'm seeing for multifamily properties are just absurd. I don't know how you can make the numbers, make sense, but people are buying them and they're willing to accept those types of returns in order to, lock in their position.
Right. Yeah. And I still see that as also very high risk, because like I said, those numbers are so slim. That's like, if one thing goes wrong, then it's gone. Yeah. So it's like, that's too much risk for me. Yeah.
Oh yeah. And again, it's one of those things where, I think that now that there's been more of a proliferation of information and more people are starting to get interested in investing, in particular on the multifamily side, I mean, you're starting to see just a wave of people that are, wanting to buy these assets. And so as you start seeing more and more people coming into the space, it's just going to create natural competition. And with competition, prices drive up, and, at some point it'll equalize or stabilize. But, at least currently it's a free for all, man. It's pretty amazing. And it's across the nation. It's not just specific to one municipality or state.
Yeah. So I know you were talking about like you're getting invested in multifamily. Didn't at some point, do you do property management with those, or do you have someone else take care of that? Or
so that first fourplex I bought here in Idaho, I manage that one. When I first got it, I decided to self-manage, first of all because I wanted to save the cost. It was not it cash flowed, but not necessarily a lot. I wanted to make sure I kept most of that for myself. So I decided to self-manage it starting off. And plus I just wanted to learn the process. I want to learn more about it. So one day when I did hand it off to a property manager, I would know if they're doing a good job or not based off of what I knew about the property and whatnot. And so now, 5 years later, I still self-manage that property, only because it literally I've got it so efficient now that it really takes no time at all for me to do it. And the property manager I have spoken with that manages two other ones right next door, he was not willing to rent them at the amount that I am. The ones that are next door are renting for a lot less than mine rent for. And I was like, would you rent them for this? And he's like, no, it would be at this. I'm like, well, that doesn't make sense. So I'm going to pay you to rent them for less. And so no thanks. And then, so then on top of that, I did start doing some other property management here locally where I'm at, kind of again, sort of by accident, some friends of ours that, so my wife, she's a realtor. She bought this property or closed this house for some friends of ours. They got transferred for their job. They just bought this house less than a year before they got transferred. And so I was like, so he didn't really want to sell it. So I was like, well, I could manage it for you. Not a big deal. He's like, sure, then why not? So I took over the management of this house for him, and it's literally like a luxury property for the price range of it. But so I started doing that, and then then I was like, maybe we could scale this up a bit more and take this on as some additional income source. And because I was like, I don't really mind it. I kind of like it as long as I'm managing good properties. I don't want to be like the slumlord type properties. So as long as they're good quality properties and you get good quality tenants, it's no trouble. And so So we started offering that as an additional resource for some of my wife's clients. I was like, because again, she still works primarily with investors. So like if her investors buy something with her, then we offer to them that I'll provide the first 2 months free management and a reduced management fee. And of course they don't have to take me. They can still stick out their own, no problem. But in most cases, they usually talk to me before they talk to her anyway. We get a lot of her leads come through Bigger Pockets or the contacts I have. So I just kind of feed them off. So they already know me to begin with, so they trust me. And so I've started growing that business as well, just as a local property management. But with everything else I've got going on with the commercial stuff, I've gotten to the point I'm not sure I want to even really continue trying to grow that. I'll still take on some organic growth, but I'm not like marketing it or promoting it to grow it to a scale that would take too much time. Of course, if they got to that point, I'd just hire some people and take it over. But at the same time, it's hard. It'd be hard to get somebody to have the same type of, I guess, care and precision that I do to manage it, to not tarnish the name. So I'd almost prefer just to when that day comes, I'll just drop it completely, pass it over to somebody else, and have nothing to do with it.
Yeah. No, that makes sense. And it is a skill, man. It's something that you have to develop over time. And I actually own a fourplex myself here in Louisville that I house hacked myself. So I lived in one of the units, rented out the other 3 for about 2 years. And then, that's what enabled me to jump into the commercial real estate brokerage space, because it's inherently difficult to get started because you just don't make almost any money the first couple of years. And so that's what enabled me to make the leap from what I was doing before into now what I do today. But the management side of it is definitely a skill. And there's a gentleman local that's actually affiliated with Bigger Pockets, Mike Butler. He does like he wrote a property management book with Bigger Pockets. And I remember reading that book and I was like, oh, this makes a lot more sense, because, anytime you're trying to show the space to the tenant, sometimes the tenants don't show up. So I ended up getting like one of those lock boxes you put on site, and they can come in, they have to send you a picture, so like optimizing the processes when it comes to property management makes it so much easier to be able to manage it on a day-to-day basis. And then setting expectations with the tenants, because, again, this is where they live, but you also have to make sure that they're not, doing something that would detriment the property as a whole. And so, it's definitely acquired a skill that you acquire. And I'm sure you've refined that skill over time, having managed other people's properties.
Yeah, even that, like you mentioned, the books, like the Bigger Pockets book, the book on managing rental properties was one of the first ones I read, and that helped a lot. I was reading that during the whole closing process of that first fourplex to be prepared for it, and it helped a lot. But some of the refinements have come up just mainly because of started with COVID stuff. So the biggest problem for me was showings. If I had a vacancy, and I try to I don't do scheduled showings for people, but initially I was like, anybody wants to come see it here? Yeah, sure. Set up time, we'll go see it. And so it takes a lot of time for me just to drive back and forth to go show it to people that may have not be interested. So when COVID came about, I used that as an excuse. I was like, well, we're only going to show it for qualified tenants. You got to first apply. I got to preview for everything, and then we'll schedule time for you to see it. So that way it weeds out 95% of the ones that are just going to waste my time anyway. And since then I've kept that in there. I just incorporated that as, okay, that's actually a smart thing to do, to not waste my time. So I'm just going to have them, they got to apply first, pass everything, and then I'll schedule time.
Yeah. No, that's really smart. And that's definitely part of the process that I do. And I even skip out on the actual going to the site. I have like a lockbox that I hide on site, and it's a digital lockbox. And I just say, I need you to send me a picture of your photo ID with you holding it, so that, I know that if anything were to happen I have physical proof that people have been inside and who it is, in fact. So, that's what I've even done myself. And it makes a huge difference, especially with, like you said, driving back and forth, wasting time, and that sort of thing. So one thing I wanted to ask you is, obviously we've interacted through LinkedIn, and obviously social media is becoming such a prevalent part of business as a whole. And so I was kind of curious to hear, because you mentioned how you weren't even on any social platforms over the last couple of years, and then you started getting into it. Well, how has social media and the platforms that you've leveraged helped your business grow and succeed?
I'd say everything's come from it, honestly. The levels of growth that I was doing on my own, just scaling through contacts on Bigger Pockets mainly, I was getting there, but it was definitely taking a lot longer. Getting active on LinkedIn in particular, that led me to many different connections. That's essentially what led me to connect with Happy Camper Capital to begin with. Another partner that is in that development deal I'm doing in Arkansas for that commercial space. That partner came through connections I made through LinkedIn. The other team that I'm on with the multifamily development, now connecting with them did not come through LinkedIn, but because the connections I made on LinkedIn and other social media is what helps us therefore bring in those investors to those deals to make that happen. So I could not have done that part to even say, yeah, I could bring value to guys without having those connections are already made and continue to grow through social media. And right now I'm purposely trying to be active on especially LinkedIn, but also now Facebook. It is not so much to go out there and say, hey, look at me driving, fancy cars or whatever, like some of the guru type things do. I'm putting things out there to help, more like attract the average person like myself, somebody that's starting out and wants to get into investing, wants to start growing their wealth and finding other sources of income to say, hey, you can do it here. You can have fun with it. You can get better returns than you're getting elsewhere possibly. So I'm doing that to kind of grow our name brand first of all, and just the Happy Camper Capital name getting out there, being known in this space as the providers of these RV campground syndications, which is like I said, relatively unknown for most people. Even myself a year ago, I didn't even know you could do that. But there are a few people out there doing it, but I'm helping to educate people to get them to know that is additional investment product to get some diversification in your portfolio and potentially higher returns as well.
Definitely, I couldn't agree more.
So one of the questions when we start kind of rounding out the podcast is we ask everyone on the podcast, because most of the time, like you said, you read Bigger Pockets and stuff like that. And the question is what are one of the most impactful books that you actually read? And it doesn't have to pertain to actually commercial real estate. It could be anything, but.
So for me, I'd say there's probably two.
Sure.
One of them I read earlier on, and one of them I read recently, even though it was suggested, years ago. One of the earlier on books that I read, going with my background with finance and I guess taxes, investing, and things like that. I was always curious to that you always hear about the wealthy, like having tax advantages. They make a lot of money, they paid no taxes. Like, well, how do they do that? Once you learn that it's anybody can do it, So I liked the book called Tax-Free Wealth by Tom Wheelwright. That's it's of course about taxes, but it's not as boring as it sounds about taxes. It's very educational and it helps you to think of things in a different way to find, okay, you can set up things a certain way to save money on taxes, really. So it's great for anybody in commercial real estate for sure, or even residential real estate. And the other one, again, it's one that's been I think suggested many times on Bigger Pockets. And I bought it years ago and it sat on my shelf for years until finally this I think it's last fall or something. I finally decided to pick it up and read it because it's a short book anyway. It's called The Richest Man in Babylon. And it's just overall great information just about anything with it covers all topics, business, partnerships, finances, investing, even syndications in there. But it covers all the gambits of it in a story mode. So you're not like just reading about stuff. Here's what you do. It's just a story going on, and you're learning as this fictional character goes on and builds his wealth. And so I was like, I thought it was very entertaining. I loved it a lot. And then I ended up finding out inviting there's a children's version called The Richest Kid in Babylon. So I got that and I read that with my 10-year-old kid, and he actually loved it. So I was like, great, I can at least teach him these things that I want him to learn without having to bore him with an adult book, So those are I think great resources that I tell everybody to read.
That's great.
Nice. I'm definitely gonna have to read the Richest Kid in Babylon to my kids, the 10 and 8. So that's good. Yeah.
Yeah,
Awesome.
the Richest Man in Babylon is one of the early books that I read, and it's an impactful book. And so if you haven't read it, I highly encourage you to do so because it really is one of the classics that is always recommended. So
yeah,
that's awesome. So one thing we like to ask our guests to do is we have something called the Commercial Real Estate Treasure Chest. It's a repository of resources that we make available to our audience, and we have people contribute helpful PDFs, Excel sheets, anything really that they think would be of benefit to our audience. So what we typically do at the end of the podcast is we ask, what are you willing to contribute to it?
Sure. Yeah. So if you've ever read any books from Gary Keller, he always in his books talks about, tracking your net worth. It's one of his big things he always did. Like he looks at it every single day to track his net worth. So through Happy Camper Capital, we have a net worth tracker that we can provide people that maybe need a starting point just to start off and say, hey, where am I at? Because I did that myself, a few years ago, not even having any clue but where we stood. And I was surprised about how much debt we had at the time and how much we were spending on that. I didn't have any clue until I started tracking my own net worth, right before I got into real estate investing. So I think it's a great resource for people that maybe have not done it or haven't done it for a while to start tracking your net worth and see really where you're at and what you need to do to get to the goals you're trying to get to.
Yeah, definitely. No, I'm sure that people can benefit from that a lot because, it's one of those things where you just don't think about on a regular basis. It's like, periodically you may check and say, oh, like, what's my net worth today? But it's not something that people track on a regular basis. So I'm sure that people are going to take advantage of that. So thank you for that contribution.
Yeah.
Ron, we really appreciate your time and especially your story and sharing your experience and everything. I see it up there on your background, your email address. So the last question we normally ask is, how can everyone get in contact with you? So I didn't know if that was the particular rail or drive or street that you want them to go down to contact you. But if you just let us know, that'd be great.
Sure. Yeah. Also, you can reach me by email, don.spafford@happycampercapital.com. You can also find me, of course, on LinkedIn. That's where I'm very active there. Happy to connect with you there. If you go to our website, happycampercapital.com, you can go to the About Us tab, and you'll find my name and profile on there, and you can therefore on that page set up a time to chat. My calendar link is on there to set up time to talk if you want.
Nice.
Definitely. No, and I'm sure that people will want to reach out, but also, what we'll go ahead and do since we record this is we're going to put it in the description. So if you guys listen to this in a YouTube format, it's going to be in the description below. And if you guys are listening to this in a podcast format, whether that's Spotify, Apple Podcasts, etc., it'll also be in the description below. So I encourage you to reach out to Don and, connect with him on LinkedIn. I'm connected with him and he does provide a lot of great content via his profile. So, well, again, thank you all so much for stopping by. It means the world to us with all the, we know you're a very busy individual. And, for those of you guys who are listening, obviously we greatly appreciate what you guys do on a day-to-day basis, actually listening to the podcast. If you guys don't mind, we would greatly appreciate if you could leave us a 5-star review. It really helps with the algorithm and making sure that we reach a broader audience. And it's helped us with download numbers immensely. And so obviously we greatly appreciate everything you guys all do. And we'll see you all next time.